For the 11th month in a row, the Bank of England has kept interest rates at 0.5%, the lowest in the bank's history. In an effort to support the economy, the bank has also had a policy of quantitative easing in place since March 2009. Quantitative easing pushes new money into financial institutions in order to stimulate growth, with some £200 billion pumped in since QE was introduced. With economic growth for the last quarter of 2009 at just 0.1%, what impact does the news that the bank is putting QE on hold have on the property market? We spoke to Peter Bolton King, Chief Executive of the National Association of Estate Agents, to find out.
Yes, the Bank of England have just announced that they have used up the £200 billion that they've pumped into the system, and that they're going to now hold off and wait to see what happens. Now, definitely it has helped to ease the supply of funds coming through into the banks, the building societies, which obviously is very, very important to see the people getting their mortgages come through. I have a concern that whether they've actually stopped it too early, but I think the situation is slightly easier than it was. And I think the important thing is to keep monitoring it very, very closely. And if we feel still that there is not enough money coming through into that front end, into the high street, then we'll be putting further pressure on the government and the Bank of England to continue looking at this. I think the level of money coming through this year is going to be critical to the market, and I do have concerns that it is still very difficult for a lot of people to get their mortgage without a big deposit.
So what impact will inflation have on the housing market?
I mean, generally, the level of inflation that we hear, which is going up a little bit by the sound of it, then will hopefully come back. I don't think that really has an effect itself on the housing market, because the housing market is actually driven by the availability of funds, by straightforward supply and demand. So in itself, it won't have an effect. Now, I think our general feelings this year is that the house prices might well go up a little bit, and I think it's going to sort of bump along, come back down, go up again. And I think we're likely to end the year on practically a zero growth this year. That's our forecast.
Are you surprised by the extent of the rise in inflation?
I think most of us all expected them to hold interest rates as they were. I think there is a slight concern out there that as prices went up, household prices went up 2.9% in December, that whether they'd start getting a little bit worried and start saying, have we got to put it up? I think they accept that inflation may go up a little bit above their target limits, but I think the general expectation, as long as nothing else happens, is that we won't see interest rates rise before the second half of the year. But I will be very, very surprised if I'm sitting here talking to you in December with them not having gone up.